I hear this all the time from clients that said, the equipment that I used to have to depreciate over a period of time, now I can write all of it off in the first year.
Yeah, so jump into one of the bigger changes of the tax or of the One Big Beautiful Bill is bonus depreciation. Bonus depreciation, when the Tax Cuts and Jobs Act went into play, said that if you have a fixed asset of your business, think a table, furniture, equipment, a heavy vehicle, hell, even a rental property, if you will, fixed assets that you purchase, the IRS said that anything that has a depreciable life of 20 years or less is eligible for what's called bonus depreciation. Prior to the One Big Beautiful Bill making bonus depreciation 100%, which, by the way, just means that if I bought a truck that's at least 6,000 pounds, or I bought a piece of equipment, and let's just say I bought it for, say, $10,000, bonus depreciation says I can write off that entire $10,000 in the year I purchased and put that asset into service. Prior to One Big Beautiful Bill, there was a gradual decline of bonus depreciation. So for tax year 2025, for example, bonus depreciation was only set to be 40%. So in that same example, if you bought a new piece of equipment for $10,000, One Big Beautiful Bill says I can write off 100% of it. So prior to that, it would have been $4,000.
Let's say you got a company that has a bunch of dump trucks.
Absolutely.
And they have to keep replacing those dump trucks. And if they had more dump trucks, they could maybe do more business. So that's that catch of, do I go ahead and borrow the money and buy the dump truck and expense it right away? And I got old stuff that I have to replace. I have a client, they went from, maybe paying tax on X amount a year to paying no tax because their bonus depreciation completely offset their taxable income.
Absolutely.
And the thing is that looks amazing on paper, but you have to factor in the cash that has to be paid every year on the principal payments on the equipment you just bought.
Absolutely, you do.
And most people just won't pay cash for that stuff. It's better off to spread it.
Yeah, finance it.
Yeah, to finance it. So if you're replacing dump trucks, you might not pay any tax, but you might be chewing up a bunch of your free cash flow.
Yeah, it's definitely a balance. So at least on the tax piece, we like to do a mid-year and end-of-year planning with our clients, and I know you do with yours as well. And One Big Beautiful Bill, especially now that we can bonus depreciate dump trucks, as an example, oftentimes what we'll do is we'll forecast where we think your taxable income is going to be and make a decision with the business owner that says, hey, if you owe $100,000, and let's say you're in a 25% tax bracket, so more than likely your taxable income's $400,000. If we bought $400,000 worth of new dump trucks, claim bonus depreciation, we could get you to zero. So from a tax perspective, it's very, I don't want to say easy because there are other options and other considerations like cash flow needs. But it's an easy recommendation on the tax side to go, yeah, let's go buy 5 dump trucks and get to that $400,000 worth of deductions. But the trade-off absolutely is part 2, going, if we write them all off in year 1 and we've got a 5-year note on these dump trucks, and I can't write them off year 2, year 3, year 4, year 5 because I already wrote them off in year 1.
You might have to keep buying dump trucks to not pay taxes.
Absolutely,
right?
You might, yeah.